So your client comes in and says, hey, I need a set of financial statements. The bank needs this. Can you do an audit for me? And I say, are you sure you need an audit? And they say, well, I think I do. I need financial statements. And so I look at their company. We talk about the complexity of their records and whatnot, and I give them a ballpark figure for the audit, $30,000. And they go, oh, no, we don't want to spend that much. And so when I run into this, I'm always keeping in mind there's really 4 different options that we as CPAs have to issue financial statements or issue reports in relation to financial statements. Now, one of those options is an audit, so we can perform the audit, then we issue an audit opinion in relation to the financial statements, and oftentimes the auditor does create the financial statements. Now, we have to make sure we're independent, but it's very common for a CPA to perform the audit, create the financial statements, and then issue the audit report along with the financial statements. The second option that you have is a review engagement. So if an audit's $25,000 or $30,000, and I'm just using some ballpark numbers here for a small company, a review engagement oftentimes could be done for, say, less than $10,000. And I'm not trying to tell you how to price your engagements. I'm just trying to give you some ratios of, say, what an audit would be and what a review engagement would be. But you can perform the review engagement. That's simply inquiries and analytics. So all you're doing is asking questions about the numbers, and you're doing analytics such as comparing the current year numbers with the prior year numbers, or you're using ratios. It's pretty simple. So you do the engagement, you document your work, you create the financial statements, you issue a review report that goes along with the financial statement. So that's option number 2. Now let's go to option number 3, and that option is a compilation. So under ARC 80, you can look at the SAR standards, and you'll see all you have to do in a compilation is read the financial statements and then issue a compilation report. And you do have to issue a report here. It's called a compilation report. So you issue the compilation report along with the financial statements. Now, I'm going back to my relative numbers here. Let's say an audit's $25,000 to $30,000. We'll say the review's in the neighborhood of $10,000, and a compilation could be as little as $2,000 or $3,000. And most of the costs there would involve the creation of the financial statements, because in terms of the work paper documentation, the main things you have to do is have an engagement letter, read the financials to see if they are appropriate. And that's kind of the crux of doing one of these compilation engagements. It's not really that complicated. And then the fourth option is the simplest one, and this is a preparation engagement. So if you look at ARC 70 in the SARs, you can issue financial statements without a report. So if a client just needed a balance sheet and an income statement, and they didn't say want notes to the financials, you could do that under ARC 70. All you're doing when you issue these types of financial statements, there's a legend at the bottom of the pages that says that no assurance is provided in relation to these financial statements, or you can have a disclaimer page that precedes those financials that says basically the same thing. There's no assurance provided by you, the CPA. So we see that we have 4 different options here. Can you name those? Number 1 is a audit. Number 2, a review. Number 3, a compilation. And number 4, a preparation. So if the client really wants to go all in and have an audit, they're going to pay for it. It's going to be much more expensive. If they want something scaled down, then they can get some assurance in a review engagement. And then if they want to scale down more, they can go to a compilation, but there's no assurance provided by the CPA in that third option. Then obviously the fourth option, preparation engagement, there's no assurance there either, and there's not even a report on that fourth option. You do need, if you're the CPA and you do the preparation engagement, you do need an engagement letter that's signed by the client and yourself, and then you can prepare the financials. There's a lot more I wish I had time to say about the preparation option and the compilation, because there's some nuances there where you can make things simpler. But in summary, we go from audit, review, compilation, preparation. On an audit and a review, you have to have a full set of notes to the financial statements. If you don't have the full set of notes to the financials, then you're going to modify that report in some manner, either modify the audit report or modify the review report. On a compilation and a preparation, those last two options, you don't have to have full disclosures with the financial statement. So, for example, you could have a balance sheet and an income statement without disclosures. So I hope this helps. It's quite common in CPA firms for clients to come in and ask, say for an audit, and they don't know what the word audit means. And then when you explain to them what the cost of that is, then we have to do some educating like we're doing right now. And you can provide them with these other options. And then after you have that discussion, you can put together an engagement letter and provide the financial statements that they are after. I hope this helps. Until I see you next time, take care. Bye now.